Welcome back to Flawless Finance, where we delve into the world of finance and dissect some of the most significant moves in the industry. Today, we're delving into the story of one of Wall Street's giants, Goldman Sachs, and their bold attempt to break into the retail banking arena. Goldman Sachs, known for its dominance in investment banking, shook the financial world when it decided to venture into retail banking. The promise was to revolutionize banking, offering customers a fresh alternative to traditional banks. But did it succeed in this ambitious endeavor, or did it all crumble? Let's find out. The drive behind the expansion. To truly understand what went wrong with Goldman Sachs's expansion into retail banking, we need to rewind the clock to the motives behind this grand move. Goldman Sachs, like many other financial institutions, saw an opportunity to diversify its revenue streams. Traditionally an investment banking powerhouse, they sought to tap into the immense potential of the retail banking sector. The reasoning behind this was simple: retail banking could provide stability and a broader customer base, which would, in theory, reduce their reliance on the volatile world of investment banking. The Retail Banking Initiative. Goldman Sachs's entrance into the retail banking world wasn't half-hearted. They rolled out a comprehensive initiative that aimed to lure in retail customers. At the forefront of this endeavor was Marcus, their online banking platform. Marcus promised simplicity, competitive interest rates, and a customer-centric approach. It was designed to be a disruptor, a true alternative to traditional brick-and-mortar banks. The idea was clear: they'd use their financial expertise to offer everyday consumers better banking options and an escape from the frustrations that often accompany traditional banks. But as we'll soon discover, building a retail banking brand from scratch and convincing customers to switch isn't as easy as it may sound. Initial hopes and promises. Goldman Sachs made grand promises during the launch of its retail banking venture. They marketed Marcus as a game changer, emphasizing competitive interest rates, simplified banking processes, and a genuine focus on the customer experience. These pledges generated considerable excitement and curiosity among potential customers and industry observers alike. However, the reality of retail banking posed unique challenges that Goldman Sachs had yet to fully grasp. The established retail banking players had a long history of trust and a wide network of branches, making it tough for a newcomer to compete. Furthermore, regulatory and compliance issues specific to retail banking added complexity to their journey. Customer acquisition struggles. Despite their marketing efforts, attracting retail customers away from their trusted traditional banks proved to be a daunting task for Goldman Sachs. Traditional banks had established relationships, physical branches, and a long history of providing retail services, which made them a go-to choice for most consumers. Goldman Sachs utilized various marketing strategies to entice customers, but the success of these initiatives fell short of expectations. Converting potential customers into active Marcus users was an uphill battle, and Goldman Sachs began to realize that they were facing a formidable challenge in winning over the hearts and wallets of retail banking customers. Customer experience issues. As Marcus started to onboard customers, reports of customer experience issues began to surface. Users expressed frustration with the platform's user interface, difficulties in accessing customer support, and occasional technical glitches. These issues tarnished the initially promising image of Marcus. Negative customer feedback spread across online reviews and social media, impacting the brand's reputation. It became evident that delivering a seamless retail banking experience, something customers have grown accustomed to with traditional banks, was more challenging than anticipated. Stay tuned as we delve deeper into the financial performance, reassessment efforts, and the valuable lessons learned from Goldman Sachs's failed expansion into retail banking in the upcoming parts of this video. Reassessment and changes. In response to the challenges faced, Goldman Sachs had to rethink its strategy. The initial push into retail banking didn't yield the desired outcomes. As a result, the bank began considering changes to salvage the situation. This phase saw a potential shift in focus or strategy. Goldman Sachs needed to adapt and respond to the feedback and experiences of its retail banking customers. The question now was whether they could pivot effectively and regain their footing in the retail banking arena. Goldman Sachs's failed expansion into retail banking holds important lessons for the broader financial industry. It demonstrates that the transition from investment banking to retail banking is a complex and demanding journey. Among the key takeaways are the importance of understanding the unique demands of retail banking, building a strong customer base and brand from scratch, and being prepared for stiff competition from established players and fintech disruptors. Financial performance. Analyzing the financial performance of Goldman Sachs's retail banking segment paints a revealing picture. While initial projections were optimistic, the reality proved to be different. The revenue generation and growth from the retail banking initiative didn't meet expectations. Goldman Sachs had invested significantly in Marcus and its retail banking infrastructure, which meant the project had to deliver substantial returns to justify these investments. However, as we'll see, the financial results didn't align with the bank's ambitious goals. In conclusion, Goldman Sachs's foray into retail banking, epitomized by the Marcus initiative, started with high hopes and grand promises but ultimately faced significant challenges. The drive behind the expansion was noble: diversification and access to a broader customer base. Yet, the retail banking landscape presented formidable obstacles. Customer acquisition proved tough, and customer experience issues damaged the brand's reputation. Financial performance fell short of expectations, leading to a reassessment of strategy. This story teaches us that the transition into retail banking isn't a straightforward path, even for giants like Goldman Sachs. It's a reminder that in the world of finance, understanding the unique dynamics of each sector is crucial, and success isn't guaranteed, no matter how prestigious the name. Thank you for joining us today on Flawless Finance. Be sure to like, subscribe, and share your thoughts on Goldman Sachs's retail banking venture in the comments section below.